Little one Paul here. Today I'm going to give you guys an update on the Walmart case study. If you've seen the last two videos where I went over Walmart and basically how to look for basically a $1 difference in price. I mean, the goal of trading the Walmart stock with option trading is to find a $1 difference in price. If you find a $1 difference in price, you're basically making around 25%. So the goal is to trade Walmart and find that $1 difference. You're not usually going to, you can find a dollar difference in a day, but that's unlikely. Most likely you would have to buy your contracts a week out or longer to find that $1. So the goal of this strategy, and it's kind of a case study, is to find a dollar difference within a week, sometimes even two. But I'm going to go over some numbers of what I've kind of calculated on this case study, and definitely check out one of my first videos where I go over the compounding effect of what would happen if you took a certain amount of money and made 25%. That's basically trading Walmart stock, buying week out contracts, and finding that dollar every week will make you about 25%. So we looked into the compounding. And we may go into that again today, but today I just want to go over kind of how much it would cost you to trade it, and kind of where I am when I see the signals, where I position it, and how long I hold it. That's what I'm going to go over today. Okay, so we can look at this in the compound calculator. Let's just say someone's starting out with $2,000. That basically means when you're doing your trade amount is about $2,000. So whether you're buying it out for a week, the money you're risking is this amount. So this is what you would have to risk per trade, and to make these results. So a 25% is basically a $1 difference in price. So you gotta do option trading, and you gotta find a $1 difference in price. Usually that returns about 25% for a $1 difference in price. You want to do 100% reinvestment, and we're not going to include weekends because the market is closed. So we're going to look here at where you would end up. Your initial $2,000 would make you $500 the first time round, and then these are trades, so these aren't daily. This compound calculator, it's not daily. These are trades. So however long it takes for these trades to play out, that's how long it's going to take, basically. Second time you do it, if you find another dollar difference, you take the gains you made from the last time, add it with that principal balance, and your earnings now are $625 a week or per trade, and your balance grows. So within 30 trades, let's just skim ahead here. If you're successful in doing this 25 times, 25 trades, you keep adding your interest to the original amount, and your amount will grow to $5,290,000 in 25 trades. So in 30 trades, if you kept it up, you would have made it over $1 million. So all it takes is roughly 28 trades of finding a dollar difference with the Walmart stock, starting with $2,000. So I kind of want to go over what I've learned. I mean, what to kind of look for when doing a trade. Now, the good thing with Walmart here is you can buy your contracts a week out. So when I'm looking at this, I'm looking for 2 to 3 weeks. So I usually buy on a Friday, and I usually buy them. So today's August 31st. So what I would do is I'd usually buy them around Friday. So I would do is I'd buy it like 2 to 3 weeks out. So I would go for this option right here. And then what you want to look for is you want to kind of go at a good number here. Now, we're predicting that the price is going to go up in this scenario here. But basically what I look for is to get this line as close to the dot as possible. And basically it's about $1,000. It's about $1,000 per contract. That's basically what I look for. So I basically look for, I buy a contract for per every $1,000. So that's how you know when to scale up. That's just what I do, because it allows more time. Because the price would literally have to tank to I think that's 96. So it would, the price would have to tank down by $10 in order to lose everything. So we do one contract here, you'll make $100 for every dollar. But if you do 10 contracts, you'll make 1,000. You'll make 1,000 for every dollar, basically. So, and you know, when you're at 10 contracts, and the more contracts you buy, the faster you're going to see your money move during the trades. I started up in my scale, and I started doing, I think I did it with, I think I'm up to 3 contracts, and it was moving at a pretty fast rate. So at 3 contracts, which is what I did the last time, it basically means you're making $300 for every dollar. So you catch Walmart, if within this time of 3 weeks, if you catch Walmart with $1 difference, you'll make $300. So basically, you just scale it up. Every 1,000, you buy another contract. So 1,000, 1 contract, 2,000, 2 contracts, 3,000, 3 contracts, and you know, you get to 10,000, you have 10 contracts. So you'll be at that point, and you can scale it up. So basically, that's how you do it, and that's how you compound it with the numbers that we saw with the compounding calculator. So real easy. I want to go over kind of the formula that I use, and I discussed this in my last video. So basically, how I have this set up is I have my Ghost Market Pro swing set up here, and if you guys want that, you're gonna have, it's a paid indicator. So I'll put a link below if you guys want to grab it. But otherwise, there's alternatives that you can use. One's called Kyle Algo. It's pretty similar. Kyle Algo is pretty similar. I think they use less moving averages, but it's pretty similar. If you want to use that, you get the general idea from that. If you don't want the Ghost Market Pro, which is a paid indicator, you can use that. Or you can upgrade your TradingView membership and get more moving averages and just plug them in. You will need a lot of moving averages to equal that of what is shown with Ghost Market Pro. Because Ghost Market Pro is a lot of moving averages. 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60, 65, 70, 75, 80, 85, 90, and 95. So those are the moving averages you need. So you're gonna, if you don't get Ghost Market Pro, you'll need to at least upgrade your TradingView account. And the other thing I have down here is MACD. With MACD, I changed my settings to 1348, and I don't use the histogram. So basically, it's real easy to find those dollar differences by looking at this. Right now, what we can tell is the Walmart stock is in a downtrend. Well, I do see it in an ascending channel here, and it's probably going to start coming back up. But I think it's going to come down and come back up again. So it's on its way back up, basically. But basically, you want to identify the overall direction by looking. We go to the day here. Now, if we look at the day, we could see that it is in a downtrend. Long term, we're in a downtrend. So on the overall, it's in a downtrend. It's retracing right now. But overall, I think it's going to bounce back pretty soon. But what you want to look for basically is you want to get an idea what the overall direction is and then focus on that direction. So right now, if I was doing trades, I would say that it found the bottom and it's still going down. So down might be the direction to focus on, but yeah, I think it's going to start bouncing up pretty soon. What you want to wait for basically is for this blue line to cross this line for it to come back up, like you see right here. So if you want to trade based off the daily, because you do buy 2 to 3 week contracts, it's very easy to find those dollar differences by looking at your MACD. But if you want to go and look at your hour here, so if you look at your hour, we know we're currently in a downtrend. So what you want to wait for basically is for it to cross back down, which means it's probably going to cross back down before it bounces back up, which is what I'm thinking. So it's going to have one cross back down before it bounces back up. That's what I'm looking at. But basically what you want to do is once you identify the direction, and you want to look at your MACD and you want to enter when these cross. So you could easily find those dollar differences just by looking at your MACD. And in this moment right here, you see a $3 to $4 difference in price. All you need really is to find a dollar, which is 25%, and then it'll compound similar to what you've seen in that compound.